South Africa's Thungela posts full-year loss on weaker coal prices. South Africa tightens safety checks on China imports under new rules. CRA prepares 16% VAT shocker on small traders in Kenya. Seasol's value soars as Middle East war boosts oil prices. Dangote refinery hikes petrol price to $1,245–1,275/litre amid Middle East oil shock. Nigeria loses $7–10 trillion annually to poor electricity supply, CPPE warning. Stay tuned for more update. South Africa's Thungela posts full-year loss on weaker coal prices. Good morning. In South Africa's mining sector, coal producer Thungela Resources has reported a full-year loss, driven by persistently weak global coal prices. The company cited softer demand and lower benchmark prices as key factors hitting profitability. This comes amid broader commodity market challenges, with investors closely watching how energy transitions and export dynamics will affect future earnings. Thungela's results highlight ongoing pressures on South Africa's export-heavy mining industry, even as other energy players benefit from rising oil. South Africa tightens safety checks on China imports under new rules. Breaking from South Africa, new regulations are tightening safety and quality checks on imports from China. The government aims to block substandard goods, level the playing field for local manufacturers, and protect consumers from unsafe products. This includes stricter inspections and compliance requirements for structural steel and other categories. The move follows concerns over dumping and quality issues, with steep tariffs already imposed on certain steel imports from China and Thailand. Businesses importing from Asia will face higher scrutiny starting now. CRA prepares 16% VAT shocker on small traders in Kenya. In Kenya, small traders face a major tax change. The Kenya Revenue Authority is set to impose 16% VAT on their operations. This targets informal and small-scale businesses previously exempt or lightly taxed, aiming to broaden the tax base and boost revenue. Critics argue it could crush micro-enterprises already struggling with high costs and inflation. The policy has sparked debate on equity, with calls for thresholds or exemptions to shield the most vulnerable. Equity Group, meanwhile, tops Kenya's most valuable brands list amid strong banking sector performance. Seasol's value soars as Middle East war boosts oil prices. Big gains for South African energy giant Seasol. Its share value is surging daily amid skyrocketing global oil prices triggered by the escalating Middle East conflict. With disruptions in the Gulf region choking supplies, oil benchmarks have climbed sharply, benefiting refiners and producers like Seasol. This offsets some domestic challenges, including potential fuel price hikes due to under-recoveries. Across Africa, economies brace for higher fuel costs, inflation risks, and supply hunts for alternatives. Many nations run on limited refined stocks as shipments falter. Dangote refinery hikes petrol price to $1,245–1,275/litre amid Middle East oil shock. Good morning, Port Harcourt. Fuel prices are surging again. Dangote refinery has raised petrol to $1,245 per litre, with reports of further increases to $1,275 in the latest hike. This marks the fourth or fifth increase in March alone, driven by the escalating US-Israel-Iran conflict, sending global crude well over $100 per barrel, some days nearing $110–112. Ex-depot gantry prices jumped from $1,175 to $1,245, then higher, as supply disruptions in the Gulf raise import and refining costs. Despite Nigeria's oil export gains, domestic reliance on refined products means pain for consumers. Petrol now ranges $1,200–1,400 at pumps, with queues in Lagos and scarcity reports nationwide. Nigeria loses $7–10 trillion annually to poor electricity supply, CPPE warning. Power sector alert. Nigeria is hemorrhaging $7–10 trillion yearly from unreliable electricity, according to the Center for the Promotion of Private Enterprise. CPPE highlights how chronic shortages cripple manufacturing, businesses, and households, adding massive costs via generators, lost productivity, and stalled growth. DISCOs report cumulative losses of 2.35 trillion over 2 years from billing/collection inefficiencies, while generation averages just 4,300 MW against 15,500 MW capacity, a shortfall of over 11,200 MW post-privatization. Debt in the sector hits 6.8 trillion for Gencos, restricting output further. Thanks for rocking with us today. Stay inspired, stay proud, and keep supporting African excellence. Keep watching on Top Accolade News.